Hey everyone, welcome back to Corporate Decoder, the place where we unpack the secrets hidden within those massive corporate reports and make them easy to understand. This year, Palo Alto Networks is showing us their latest 10K, and let me tell you, they've got some big moves happening, especially with that huge deal they just made. Alright, let's strap in and dive into Palo Alto Networks' latest annual report for the fiscal year ending July 31, 2025. First off, you'll see they've made a serious push into AI with a new platform called Prisma As, designed to protect everything AI related. They also acquired Protect AI in July 2025 and are planning to acquire CyberArk Software Limited, which is a massive identity security deal expected to close in the latter half of fiscal 2026. Now, let's talk numbers. Their total revenue hit a whopping $9.2 billion for fiscal 2025. That's a 14.9% jump from the previous year. Their subscription and support revenue is the real champ, making up 80.5%. This shows they're really leaning into their subscription model, which is great for predictable income. This subscription and support revenue grew nicely to $7.4 billion. That's up 15.5% from last year. It's clear that customers are buying into this ongoing service model. And speaking of big numbers, look at their goodwill. It shot up from $3 billion. The jump is largely due to those new acquisitions like the IBM QR Bar assets and Protect AI. It shows they're growing not just organically, but by buying into new technologies and companies. While their revenue is looking good, their net income for fiscal 2025 was $1.1 billion. That's actually down from the $2.5 billion they reported in fiscal 2024. Now that might sound alarming, but it's important to remember that in fiscal 2024, they had a huge tax benefit from releasing that valuation allowance on deferred tax assets, which gave them a temporary boost. So while net income looks lower this year, it's partly because last year had an unusual positive event. This tax line is interesting. In fiscal 2024, they had a big benefit from income taxes due to releasing that valuation allowance, which really boosted their net income. In fiscal 2025, they paid $461.08 they saw before. They also mentioned the One Big Beautiful Bill Act, which is changing how they account for foreign earnings and is impacting their deferred tax provisions. Now, Palo Alto Networks themselves point out a significant risk they face is that their operating results can swing quite a bit from one period to another, making them hard to predict. This is partly because they tend to get a lot of sales orders in the final weeks of each fiscal quarter, so if those deals slip, it can really impact their numbers. They also flag a major risk if they can't keep selling new and expanded offerings to their customers, especially those big enterprise clients. Their future revenue and profits could suffer. This is why they're always pushing for those platformization strategies, trying to get customers to buy more and more of their integrated solutions. A big part of their business model relies on channel partners selling their products. For fiscal 2025, nearly 45% of their revenue came from just 3 distributors. This is a classic situation where if even one of these partners stumbles, it could really hurt sales. As a cybersecurity company, they are a prime target for cyber attacks. They acknowledge this risk directly, stating that a security breach could seriously damage their reputation and financial results. This is a constant battle for them and a key area of focus. They're located in California, so earthquakes are a tangible risk, but they also mention broader catastrophic events like pandemics or terrorism that could disrupt their supply chain and their business operations. It's a reminder that even tech giants are vulnerable to the unexpected. Looking at the big picture, Palo Alto Networks is clearly in a high growth mode and is heavily investing in future technologies, especially AI and security for AI. The acquisition of CyberArk for an estimated $25 billion is a massive strategic move to expand their identity security footprint. However, this aggressive growth strategy, including those large acquisitions, comes with significant risks. They're juggling the integration of acquired companies, the ongoing competition in the fast-paced cybersecurity market, and the ever-present threat of cyber attacks, their heavy reliance on a few key distributors, and the complexities of managing a global supply chain for their hardware also present challenges. On the brighter side, their subscription revenue is strong and growing, providing a solid base. The shift away from product revenue dominance to subscription revenue shows a mature business model evolution, but they need to ensure that profitability keeps pace with revenue growth, particularly given the dip in net income this year, although, as we discussed, that was heavily influenced by tax changes last year. So what's my take on Palo Alto Networks right now? They're making big bets to secure their future in the AI and identity security space, which are smart moves for long-term relevance. Their strengths lie in their strong recurring revenue from subscriptions, robust R&D, and their ability to attract top talent. However, the integration risks from large acquisitions, their intense competitive landscape, and the sheer complexity of their operations are significant headwinds. They're navigating a complex but potentially very rewarding path. What's your take on Palo Alto Networks' latest filing? Do the acquisitions excite you, or do the risks worry you? Let me know your thoughts in the comments below. If you found this breakdown useful, please hit that like button and subscribe for more deep dives into corporate financial documents. And hey, if you want to chat more about these reports and connect with other finance enthusiasts, check out our Discord community linked in the description below. Thanks for watching Richard Dives into Corporate Financial Documents. And hey, if you want to chat more about these reports and connect with other finance enthusiasts, check out our Discord community linked in the description below.